To say the crypto markets have taken a crash over the last month or so would almost be an understatement. And it's a tough time for a lot of people that have got a lot of funds invested. Same in the stock market. Things have been dipping. And the last thing you want to do is get stung by a massive tax bill. So today I'm going to talk about the one thing that you need to do. This is the most important video I've probably made on this channel for people over the next week. So stay tuned as I talk to you about the tax implications of a massive market drop. Hello everyone, my name is Ethan Rishock, and it hasn't been a fun time for those that are investors, whether they're in the share market, whether they're in crypto, whether they're in NFTs. Property's probably been relatively alright and it's a different type of market, but in those more liquid style markets, things have dropped a lot over the last couple months, and it's been for a variety of reasons, but the reality is we had a massive growth during what was actually quite a tough time for businesses, but there was a lot of government money poured in, etc. Markets increased a lot, and it is now recorrected. It's dropped a lot, and people need to be aware of the tax implications of this. And I want to get straight into it. It is so important as we're coming close to the end of the financial year in Australia that you understand what is your current tax position based on your investments. And for most people that are just investors, this is going to be looking at, well, what were your income events? So whether it's for shares, it might be dividends, or if it's crypto, it could be airdrops, it could be staking rewards, etc. And then what are your capital gains positions? So what have you actually realized as a capital gain or a capital loss? So whether you've sold some shares, whether you've traded crypto to crypto, so you might have got out of Bitcoin and moved into Ethereum, that's a capital gains event. Understanding what this is, what's your total position, what is your tax liability, and then you need to look at, well, what's my other positions? Is there anything I could do to adjust that? So let's go through some examples here. So say you've invested in an asset, so we'll call it asset A. So that could be a share, it could be a cryptocurrency. And then you've gone and traded that. You've sold that through the year and you might have bought asset B. So whether that was a direct coin to coin, for instance, in crypto, so you might have gone from Bitcoin to Ethereum, or whether it was shares, you might have sold your Apple shares and went and bought Tesla shares. You've recognized a capital gains event there. So say on that trade, you might have made $10,000 because you might have acquired that first asset for $5,000 and you've sold it for $15,000. So there's a $10,000 gain. So at the moment, your capital gains position is $10,000. Even though you're still holding an asset, so you might be holding a new share or a new cryptocurrency, you haven't cashed it out, but you've still recognized the gain there of $10,000. Now, let's say the market has dropped like it has at the moment. So that $15,000 asset, it's had a massive drop and it's actually now down to only worth $2,000. So you're still holding it, it's worth $2,000, but you initially had an asset for $5,000, you traded it to an asset that was then worth $15,000, and now it's worth $2,000. So overall, you're going to go, oh, well, I've made losses this year, so I don't need to pay any tax. But unfortunately, based on that situation, you're wrong. You've actually got a tax liability because on paper, you have made a realized gain of $10,000. Now, you might be saying, yeah, but I've got a $13,000 loss on that asset. But if that is unrealized, that can't offset that realized gain. So you're going to be up for tax on that $10,000 capital gain, even though your asset has dropped and it's now worth more than what you initially put in, because you've made those trades of assets. Now, if you were still holding asset one and had never made any trades, then there would be no tax liability because you haven't realized a capital gain or you haven't realized a capital loss. But because you've traded that asset through the year by switching it, by whether it was selling it back to Australian dollars and buying a second asset, or whether it was directly swapping it like you can do with cryptocurrencies, you've made that capital gain. And now you need to understand, well, is there going to be a tax liability? Now, that's obviously a very simple example of where it's one asset, but I've seen people do that across, a lot of assets with crypto, where they've made a lot of coin-to-coin trades, a lot of moves, and don't even realize how many gains they've made. So I'd highly recommend you go and check out some software. I've got the links in my descriptions to Crypto Tax Calculator or Coinly to better understand your tax position. Or if you're into shares, you can go use something like ShareSite. Again, that's going to allow you to realize, what is my current tax position? What gains have I actually realized through the year? Because a lot of people just know that overall that, oh yeah, I put $10,000 in, my investments are currently worth $8,000 or $12,000, and that's how they kind of work out the gains in their head. But it's not that overall gain that really matters. It's those taxable gains as we're coming to the end of a financial year. So what do you do if you're sitting on $100,000 of gains, but $90,000 of unrealized losses, for instance? Well, you obviously need to understand, well, if you sell some of those positions that are in loss positions, then that will offset those gains in this financial year. Now, if you now wait and do that in July, that's no good for this year. So you're still going to have made those gains. So in that first example we used, Say you went and sold that position in August. So what would end up happening is for this current financial year that's about to end, so the 2022 financial year, you're going to have that $10,000 taxable gain, and that's going to be added to your taxable income, and you'll pay tax on that. You might now have a $13,000 capital loss in the 2023 financial year, but that can only offset any capital gains you have in 2023, or it will roll forward to future years. It can't be brought back into the 2022 year. And that's where people will go wrong. They think that, oh, well, I've made a loss overall. I'm not going to pay any tax. But the timing of when you've sold these positions is really vital. Now, unfortunately, this doesn't help you as well if, say, you've received income events through the year. So if you've received income events such as dividends, or in crypto world, staking rewards or airdrops, if these are income events, capital losses can't offset those. So unfortunately, if you're doing, say, a dividend reinvestment plan, or you've got a staking reward where you're getting a coin or you're getting a stock back in return rather than cash, they're going to be income events. And even if that asset drops in value, and you did sell it, you'd have a capital loss event, but the capital loss can only offset capital gains, not income events. So you really need to understand how all this works, because the chances are there are going to be people that overall have lost money, but could end up with large tax bills just of the way their affairs are structured or the timing of when they've realized gains and losses. So it's probably never been more of an important week to understand your tax position, and if you're going to make decisions based on your tax position, you need to do that by 30th of June. Now, obviously, you need to make sure you've done your own research, understand that there is more to tax when it comes to realizing or not realizing gains and losses, etc. But it could be a major deciding factor for you that if you go, I am sitting on a large amount of losses, but I've already recognized all these gains, I think it might be wise for me to recognize some of these losses, because I'm going to at least reduce my tax liability, which is going to help me in a time where maybe things are tough because your overall portfolio has dropped significantly in value. Now, don't forget, I'm having a lot of these conversations, whether it's on my Discord, whether it's in the YouTube comments, or whether it's clients directly. So don't forget, I do have the NFT project where you can buy things at a great discounted price because of the drop in ETH. So I've got NFTs that are the unique wealth builders that are priced at 0.12 ETH, which is incredibly cheap now because of the drop compared to when I first priced them. And they allow you 3 sessions with me one-on-one where we can discuss this kind of stuff and talk about the individual impacts on yourself. So I'd love for you to jump on board. If you've got queries about that, make sure you let me know. But overall, I just think it's so vital that you understand your tax position at all times, but at this time in particular, I'm really dreading to see people that end up with a large tax bill have no funds to pay it because their portfolio is not even worth that, and it could have been avoided by just understanding and making decisions at the right time. I hope this kind of content is helpful. If there's anything else you want me to cover, it's coming into tax time, so I want to do more videos, especially on tax-based topics. So drop a comment down below. Like I said, I'd love for you to join the Discord, ask some questions in there. But I do appreciate you watching. I hope you're doing well, and I'll talk to you again soon.